Hey everybody, David Skarika. So doing another one here from the river, creek, whatever you want to call it. Yeah, I don't know why this. Oh, I know why this basketball's down here. The basketball net is up there, and sometimes if you miss, it ends up down here. Yeah, I figured I'd just do it down here. So this will be out more like in the later afternoon, evening. So I finally there was a mix-up with some file I was doing with my new book. So I kind of did put together the final edit of the manuscript and was working on. There was a lot, you're working on a 200-page book, whatever, 60,000 words. It takes a little while, So hopefully, I still have to for the final edit, update some of the charts. So hopefully that's done, and hopefully this thing comes out in January. It's been put off a million times. So and then so then I'm doing this, and then I'm also going to do a members update today as well. So just a little thing to start. I think I'm going to talk about, it's Fed week coming up. It looks like, I just looked at, there's actually a 61% chance of a half-point rate cut. And what that's interesting is all the studies have shown that when they start with a half-point cut, it's actually more negative for the markets, believe it or not, because it's probably a sign that there's significant economic weakness. So they're kind of in a catch-22 where historically the last few times they started with a half point, the economy has been more weak, right? And means the economy is weak, and then the markets follow suit over the following year. But on the other hand, if you go look at where 10-year bond yields are, where inflation is, where all these things are right now, they're really, really far behind the curve, the Fed. So it's kind of like they almost have to start with that. And of course, there's also the pressure of being an election year. I'm sure the Democrats and Harris want them to cut rates more aggressively, because this will be the next Fed meeting, I think, is like a day or two after the election. So this is the last chance they'll really have, of course, unless something really fell apart in October, which doesn't look like it's going to be the case. I've been saying for a while, I think this is, if we are declining this quarter, it's more like the fourth quarter of 2000, or this could be like a 1968, 1980 scenario where the market tops around the time of the election. I've been saying that those two scenarios for a while. So that's what we could see, and we see a half-point rate cut to start, and then maybe we see that kind of process. So yeah, that's where we are standing. Like I said, I was surprised at 61%. Well, if you go look at the Fed funds future, you'll see by that November rate cut had been about 3/4 chance of 75, but it was like, I looked lower, like the 50 was going to happen in November. But I guess it looks like they'll do it a little earlier. I guess, some of the economic indicators have come in a bit soft, etc. So that looks like what's going to happen. So, yeah, it looks like here we're seeing that. Of course, and I've talked about it over and over again, rate cut cycles, gold and silver usually do well. Silver just recently broke its short-term downtrend, closing over 31 again. Hopefully that means it heads back to the 33 to 35 area. Then ultimately, probably over the next 12 to 24 months, I would expect that silver is going to go back to $50 an ounce, or back to $50 an ounce. So that would be great, maybe, and then of course gold would go higher as well. So that, that's why I'd rather be in the silver. We just recommended I have a silver stock I really like. I bought a little more of it actually last week. It's getting a nice consolidation. Looks like it's close to breaking out. So, I like this a lot. So I'm going to start to look at some oil and gas stuff as well. I'm still not as bullish. The issue with oil and gas is that there's too much supply and there's not enough demand right now, with China weakening. And of course, there's this amazing stat that 62% of all new oil demand in the last 20 years has come from China. So when you're talking almost 2/3 of new oil demand has come from China globally, like that's new demand, right? And then China is essentially, seeing a very severe slowdown in their economy. That's going to slow down the demand. And I think that's why oil continues to kind of languish. And then, even with all this talk of drill, baby, drill, for the election, well, the U.S. is producing 13 million barrels a day, which is more than any country ever has ever produced in a day. So, anyhow. But yeah, I wanted to just focus on that. Fed week looks like 50 basis points. So I'm going to do some videos, things are kind of a little slow now in the markets, right now. And like I said, because I'm not expecting much to happen until after the election, so, which is almost 2 months away, I guess a month and a half away. at this point. So maybe what we'll look at, I'm going to do some cool videos. I told you there's this waterfall. So I think I'm going to walk over to the waterfall. I just had so much work today with my book, and then I had to do, actually, for my other service, I had to do a weekly update than this, and then I'm doing my members update in a second. So I had so much work today. I just didn't have time to walk over there. And I don't know, I got this pain in my back too. Welcome to starting to get middle-aged. So, and, you know, and, yeah, I was celebrating a bit. You know, the Raiders had a big upset victory yesterday. Came from behind. First time in the last 49 times they were down by 10 points or more. So almost 10 years. It was 9 years, I think. Or sorry, 8 years ago, they said. Which was good, by the way. That was the last time the Raiders were really good. They were 12-4 that year. They came from behind and won. And, of course, the Ravens were heavily favored in that game. So, anyhow, that was exciting to see. Because especially it's great, too, when your team goes into a game like that. You expect them to lose. You have no expectations. I'll tell one quick story before I finish here about that game. So I'm watching the game. This was probably like one of the last hot, you know, summer type days. I guess technically we are still in summer. It was 28 degrees Celsius, so about just in the early 80s. It's 27 today. So, you know, everyone's at home. There's not as many people traveling to lakes or cottages and are on vacation. So the power, I'm watching the Raider game, the power shuts off for 20 minutes. And I'm like, what? I'm like, I came to Canada. So I wouldn't, you know, one reason I was happy to be here is because there was no power outages. I'm like, I must be cursed. I didn't end up missing much in the game. I missed the Ravens kicking the field goal. And luckily it happened in the first half. The first half was kind of boring. So anyhow, there you go. And I just think it's because there's so much more people in Southern Ontario. And people are blasting their ACs. They're home. Like I said, they're not traveling like they would in the summer. And you got everyone with these EVs too. You know, Sunday they're probably staying in and just, you know, got their EV plugged in to charge it up for the week, you know. So and by the way, that's the last thing I'll say about EVs. And one thing that they're not taking into account is, you know, the problem you're gonna have with the power grid. You know, at least if you go fill up your car, you know, it's like, what, you put some gas in it and that's it. Okay, you know, that doesn't do anything. So anyhow, hey, I'm glad I got set. I didn't really have much to talk about today, to be honest. And I'm glad I got 7 minutes out of this. Yeah, so tomorrow will be fun. Like, we'll do it from the, you know, from that waterfall. And then I'm going to do some other videos. I'm going to do one from this park. It's right next to where I went to high school. So I'll be doing these cool little videos too. So kind of being in Canada and having different scenery than just the beach will make it cool that I can kind of do these videos from here. Okay, everybody take care, and talk to you later. Bye.